Hey, everybody, welcome to the Trading with Ashley show. We have a huge week ahead with a lot going on that is going to create a lot of volatility. Now, if you are an option seller, volatility is your friend and you will get incredible premium. So, I imagine a lot of you are kind of wondering, how do I trade in this market? The one thing you may want to consider if you've never done it before, or if you're just kind of sitting stagnant. By the way, it is okay to sit out this week and just watch and wait till things are a little bit more normal for you to trade. I don't want anyone to ever feel like they just have to trade. There's something called over trading when you're just trying to force a trade. Let the trade come to you. But you do have to be nimble and you do have to figure out how to trade in various environments. And so, this environment, one thing that has been really fruitful for us is covered calls. And there's several different ways you can do a covered call. And so one is the standard that you may or may not be familiar with. You have 100 shares of a stock, and then you sell a covered call on it, agreeing to give up those shares if it hits your strike price, and it takes them away. Now, in this environment, I don't want any of you to be afraid to have your stocks taken away because everything's so volatile. More than likely in the coming days, it'll pull back down and you can regain your shares or less expensive than you gave them away. So that's something to consider. So that's the standard covered call. There's also something called the poor man's covered call. Now, we have been making daily income in my community by taking our SPY and QQQ leaps, and we have been selling daily calls against those leaps and making really good money. It's a quick win. We're usually in and out within a couple of hours, and we've been enjoying that because this VIX is elevated right now, and that elevated VIX has been giving us some really good premiums. And we don't overstay our welcome on these because they're daily trades, and we've done really well in the last couple of weeks. So you can do this on something like the SPY or the QQQ. I'll leave my video that goes over that at the end of this one. But you can also do it on regular stocks. And so let's say you have a leaps call option on Tesla or Palantir or Google or Amazon, any of those. You can sell calls against them. Now, you want to manage these. You don't want to shut down your leaps prematurely. And so you definitely want to buy the call back if your strike price is breached or roll it to a later time. And then there's another strategy that we've been working on that's really fun. It's called the buy right. And the reason I say it's really fun, the returns are great and you have to be okay giving up your stock. But like I said, in this environment, if you can get some quick wins, it works really well. I recently did a video on the buy right. And what you're doing is you are buying a stock. Usually it's great if it's in the middle of its Bollinger Band and you are expecting it to surge ahead and you are selling a covered call right when you buy the stock. And then if it takes it at the end of the week, then that's a really good return for you. So when we did these last week, we had some plays that ended up being plucked away. That's great. It's a great return. But then we had one that retreated and it did not take it away. And it's working out really well because now we're going to sell more calls against that same play this week. And so with stocks are already beat up as much as they are, you will be able to get an even better entry if you're selling covered calls on those stocks when you purchase them. Now that premium, it goes into your account right away when you do a buy right, and that reduces your cost basis for the stock. Now, for those of you that like new strategies and you're trying to think of a way to trade in this bear market, if you are in my community, I have a special treat for you on our Tuesday call, going to teach everybody a new trading strategy that we haven't done before. So I hope they find it very helpful. I hope you find it helpful if you're able to join me. So let's take a look at the economic calendar. I want you to be prepared. There's a lot happening that could move stocks, and I want to make sure that you're well aware. Let's go see. All the fun starts Tuesday with ISM Manufacturing PMI. Now, this stands for the Institute for Supply Management Purchasing Managers Index. It's quite the mouthful, right? Basically, it's a snapshot of the U.S. manufacturing health. Think factories, production, and orders. Above 50 means growth, below 50 means trouble. Markets watch this like a hawk. It ties into jobs and inflation. Hot data could spook investors worried about rate cuts. Also Tuesday, we have the JOLTS jobs openings. Job openings and labor turnover survey. It's a fancy name for how many jobs are out there. This tracks the open positions across the U.S. Think of the help wanted signs everywhere. High numbers signal a strong economy, low ones hint at a slowdown. Now, this sets the stage for Friday's job report. Wall Street is obsessed with this one. Okay, we have Wednesday. It's April 2nd, Trump's Tariff Liberation Day. Trump's calling it Liberation Day. New tariffs kick in around that 25% mark on imported autos. It's aimed at boosting U.S. jobs, and it could spike prices, though, on cars, goods, you name it. Markets might flip out a little. Volatility is expected as the trade war vibes heat up. Watch for headlines. This could shift sentiment fast. Bullish or bearish, who knows at this point. Also Wednesday, we have Tesla's Q1 deliveries. Tesla drops its first quarter delivery numbers, how many cars they shipped out. Now, Wall Street's guessing about 450K to 470K. If they beat it, stocks pop up. If they miss it, stocks could drop, especially Tesla. This is a big deal for Elon fans and traders. Tesla's a market mover, whether you love it or hate it. Also Wednesday, we have ADP payrolls. ADP's private sector jobs report. Think of it as a sneak peek before Friday's big show. It covers non-farm payrolls and thousands of businesses. 150K to 200K is expected. Not as official as the government's, but it's a vibe check. Markets react anyway. Strong numbers boost confidence. Weak ones spark recession whispers. Thursday, we had the initial jobless claims. It's the weekly count of those filing for unemployment. It's super fresh data, around 220,000 to 230,000 lately. Below 300,000 is healthy. Above it starts to raise eyebrows. This tells us if layoffs are spiking or slowing. It gives us a real-time pulse on jobs. Small moves can swing stocks. Traders love overanalyzing this one. Thursday, we also have ISM Services PMI. Now, this is very similar to manufacturing PMI, but it's for the service industry. Think restaurants, tech, healthcare, etc. Above 50, that equals expansion. Below 50, traders will not like it. Last month, it came in at about 54, which was solid. Now, Friday, we had the U.S. jobs report. This is the granddaddy of them all. It's non-farm payrolls, unemployment rates, and wages. It's expected to see 160K to 180K jobs added. Unemployment at about 4.1%. Wages are expected to be up about 4% year over year. Now, this actually drives the Fed rate decisions. A strong report might delay cuts. A weak one fuels them. Markets react strongly to this either way. So look for a lot of activity going into next weekend. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, I had promised I'd leave a video. This is one of my favorite videos I put together because it allows you to make either daily, weekly, monthly income, and it's how to use leaps to properly trade the SPY and QQQ. I'll leave that video for you right here.